All right, let's shift our perspective from stocks, flashing numbers, to a more grounded approach. Buying businesses on sale. I want you to remember this important point about stocks. A stock isn't just a piece of paper or a fancy ticker symbol. It represents a piece of a real, tangible business working to create value in the market.
So what's the deal with value investing? It's like hitting the sales rack in the stock market. Instead of chasing trends or blindly following the crowd, value investors seek out businesses that are trading below their intrinsic worth. It's about spotting those hidden gems, those companies that are on sale.
Why bother? Because value investing is about more than the thrill of the market roller coaster. It's a commitment to understanding the nuts and bolts of businesses. This approach, championed by legends like Warren Buffett, emphasizes digging into a company's fundamentals, earnings, dividends, growth potential. It's not a game of quick flips. It's a real approach to buying low and holding on until the market catches up to real value.
So the next time you're eyeing a stock, compare it to snagging a fantastic deal at your favorite store. If a stock is selling for $50, but you've crunched the numbers and believe it's worth $80 based on the business it represents, that $30 difference, that's your discount, your potential profit right off the bat. That's the difference of value investing. Finding businesses on sale and enjoying the returns as they appreciate.
All right, let's roll up our sleeves and dive into the heart of value investing. That's analyzing the fundamentals of businesses. It's like peeling back the layers to reveal the true essence of a company. Analyzing fundamentals means digging into a company's core aspects: earnings, revenue, debt, growth potential, and not just chasing stock price movements.
Why bother with this deep dive? Well, it's the compass in the value investor's toolkit. Instead of getting swept away by market noise, this analysis focuses on the real stuff that drives a business. Want to give it a shot? Start by looking at financial statements, like the income statement, cash flow statement, and the balance sheet. These are like blueprints of a company's financial health.
When is the value investing approach needed in the stock market? Always. Whether you're considering buying, holding, or selling, understanding a company's fundamentals is crucial. And hey, it's not just me saying it. Legends like Warren Buffett, Charlie Munger, Peter Lynch, they've made billions by staying true to this approach.
Now, let's throw in an example of analyzing a company's fundamentals. Take an imaginary company. We'll call it Company A. If its earnings are consistently growing, debt is manageable, and there's a solid track record of dividends, well, that's a good sign. Key metrics: look at the price to earnings ratio, or PE, earnings per share, or EPS, and return on equity, or ROE. If the PE is low compared to peers, EPS is rising, and ROE is healthy, you might just have found a gem. Remember, it's not about flashy stock prices, it's about the nitty-gritty of the business. So, you'll need to grab your financial toolkit, start analyzing, and let the fundamentals guide your investment journey. Let's unravel the mystical concept of determining the intrinsic value of a business. It's like peering into the soul of a company to find its true worth. Imagine Aesop's tale of the bird in the hand being worth two in the bush. That's the essence. In investment lingo, it's about recognizing the tangible value of what you hold now versus what you can get elsewhere. As Benjamin Graham, the father of value investing, wisely said, a general definition of intrinsic value would be that the value which is justified by the facts. Assets, earnings, dividends, definite prospects. In the usual case, the most important single factor determining the value is now held to be the indicated average future earning power. Intrinsic value would then be found by first estimating this earning power and then multiplying that estimate by an appropriate capitalization factor. Notice that nothing is mentioned here about the price of the company's stock. Price and value are not the same thing. Now, this definition might seem a bit complex, but we get into it later in this course. And here's the intrinsic value definition from Warren Buffett, the Oracle of Omaha. The intrinsic value of a business is the discounted value of the cash that can be taken out of a business during its remaining life. He highlights the importance of discounting future cash flows at an appropriate rate of interest, adding another layer to the understanding of intrinsic value.
So, why go down this intrinsic value rabbit hole? Well, it's your North Star in the investing universe. Instead of dancing to the market's erratic tunes, this approach looks at businesses' fundamentals, earnings, growth potential, dividends, to determine its real worth. It's not about the stock price du jour, it's about the business's inherent value.
Where to apply it? Everywhere in your investment journey. Whether you're eyeing a new prospect or reevaluating a current holding. Understanding intrinsic value is the guiding light. Investors like Monish Pabrai, known for his uncanny ability to spot undervalued businesses, or Bill Ackman, a titan in activist investing, they've used the concept with great success. Now, here's the crucial part. How to apply it. Imagine company XYZ. If it's trading at $50, but your analysis suggests its intrinsic value is $80 based on robust earnings, minimal debt, and growth potential, that $30 difference is your ticket to profit. Nick Sleep, the co-founder of Nomad Investment Partnership, is another maestro who values businesses based on their long-term intrinsic worth. So, next time you're tempted by the market's flashy moves, remember, price is not value. It's about the bird you have in the hand versus the ones in the bush, and when you can get those birds.
So, you have this high-level idea of what the concept of a company's intrinsic value is. But how does that help you? Well, here's where the magic really happens. Enter the margin of safety. Think of it as your financial cushion. It's your safety net in the unpredictable market circus.
Let's break it down with an example. Say a stock has an intrinsic value of $100 based on your analysis. Now, if the current market price is $70, you've got a sweet $30 discount. That's your margin of safety. It's like buying a top-tier gadget on a Black Friday sale. You're getting more bang for your buck. Here's the catch. If the stock is trading at $95, the discount is smaller, and your margin of safety isn't as cushy. It's like a sale where the prices are marked down, but not enough to make you do the happy dance. In such cases, some seasoned investors just might pass on the deal, keeping the stock on a watch list instead. Why does this matter? Well, life in the stock market isn't always a smooth ride. Having that margin of safety provides a buffer against unforeseen bumps. It's not just about buying low, It's about buying with a safety cushion.
So, the next time you're eyeing a stock after an intrinsic value analysis, check that margin of safety. If the discount is a juicy one, you might have found yourself a gem. And if not, keep it on the radar and wait for the market to serve up a better deal. Remember, it's not just about finding the right value. It's about doing it with a safety harness securely fastened to your purchase, just in case you're wrong. Let's take a stroll through the fascinating history of some of the investing maestros who made fortunes from the stock market by using the value investing approach.
We'll kick off with the legendary Warren Buffett, the Oracle of Omaha. Starting with a small textile company, Buffett transformed Berkshire Hathaway into a conglomerate with a market value exceeding $777 billion as of the end of 2023. His net worth, a whopping $121 billion at that same time. Then there's Buffett's partner in crime, the late Charlie Munger, who started as a real estate attorney before joining forces with Buffett. Munger's net worth soared to around $2.6 billion, showcasing the power of their dynamic duo. Mohnish Pabrai, a disciple of Buffett's value investing philosophy, started with a modest background. He managed to turn a $1 million investment into over $800 million through his fund, Pabrai Investment Funds. He ended 2023 with about $150 million. Nick Sleep, co-founder of Nomad Investment Partnership, quietly amassed significant wealth. His partnership with Chi-Ming Venture Partners and other ventures contributed to his success. Benjamin Graham, the father of value investing, laid the groundwork. His classic book, The Intelligent Investor, influenced many, including Buffett himself. Graham's principles shaped the investing landscape. Bill Ackman, the hedge fund titan, has navigated markets with flair, and his net worth hovered around $4.2 billion as of the end of 2023, a testament to his strategic investment approach. Peter Lynch, known for his tenure at Fidelity Magellan Fund, averaged an impressive 29% annual return during his management. His net worth was estimated to be around $450 million in 2023. Seth Klarman, the low-profile guru of value investing, co-founded Baupost Group. Despite maintaining a low public profile, his net worth was around $1.5 billion in 2023. Li Lu, a key figure in Charlie Munger's investment endeavors, had a net worth of over $200 million. He began as a student leader during the Tiananmen Square protests and later became a prominent investor. Carl Icahn, the activist investor, built his fortune through strategic investments and corporate shakeups. His net worth stood at around $15 billion in 2023. Walter Schloss, a disciple of Benjamin Graham, quietly accumulated wealth by investing in undervalued stocks. His net worth at the time of his passing was estimated to be in the millions. George Soros, the hedge fund manager and philanthropist, became known for his savvy currency trades. His net worth was approximately $6.7 billion after donating much of his wealth to charity. Joel Greenblatt, a value investor and author, achieved success through his hedge fund Gotham Capital. His net worth reflects the fruits of his strategic investments at over $5 billion at the end of 2023.
These investors showcase that success in the stock market isn't merely luck. It's a combination of astute analysis, a disciplined approach, and a commitment to the principles of value investing. Each of their journeys is a testament to the enduring power of intelligent investment analysis.